Wanted to take a look at a couple of extra crop condition screens here for you and get you updated on the cotton and grain sorghum conditions around the country. As I mentioned, the national cotton condition did decline by 5 percentage points. What about if you zero in at the state level? Let's take a look. First of all, the biggest producing state of cotton is Texas, and it did go down 4 percentage points, down to 45%, good to excellent. Georgia went down a couple of points. Mississippi happened to stay unchanged. But what a huge change in Alabama. We had to double check that, down 18 percentage points. North Carolina went down 11 points in their cotton condition. We also have a few other states that we added to the batch here for you. We can take a look at those, I believe. Maybe we don't have them. California comes in there unchanged, a lot of irrigated cotton in California. Arkansas, 4 points lower, 86%. Missouri went up 4 points, but Oklahoma, on the other hand, down 15 points in their cotton condition last week. Grain sorghum, we can take a look at that for you as well. And we had Kansas and Texas losing 3 percentage points on the good to excellent rating. Arkansas went down 5. We had Nebraska gaining a couple. And then you have Colorado. My goodness, a 26% drop in their good to excellent sorghum condition rating. Oklahoma went up 3 points. South Dakota went down 2. Missouri down 3. Louisiana down 7 points. And New Mexico actually increased by 4 percentage points. Wanted to run those through for you here to get you updated on our sorghum and cotton conditions. Let's go to the trading floor in Chicago and find out what's going on in the grain trade. We've had an about face, I understand, here with Todd Bubba Horwitz at the helm there at Chicago at the CME Group, and he's with BubbaTrading.com. We had the soybeans higher early on in the overnight trade and early on the open this morning. Looks like they've caved in now, huh?
Morning, Marlon. You know, I tell you, I looked at them last night when they reopened, and they were all higher. And, of course, by the time I got out of bed this morning, corn and wheat had been lower, and soybeans were still holding on to about an 8 or 9 cent gain. And, of course, now they're all down across the board. And, you know, it looks pretty bad right here just from a selling point. There's a lot of pressure in here selling, and it's really, you know, kind of shocking considering the dollar is still getting under a lot of pressure. But I think you're just seeing some selling, and I think a little bit of selling begets a little bit of selling. And I think really what I'm looking for is a spot to step here and buy again. I think we're in really good shape. I think that this is going to be overdone a little bit to the downside here, and I think it's already been a little bit overdone. So I think it's a good spot to start to look to step in.
So you don't think the crop is made at this point, like some are thinking?
Well, I mean, we can be made, but there's a lot of things that happen between now and the time that these futures contracts expire. There's a lot that happens in the economy. There's a lot that happens everywhere, and I don't see a reason to believe that all of a sudden we became worth so much less overnight. We knew all this information ahead of time. I think one of the things you're seeing is, you know, there's a big market, there's a big rally in the stock market, which takes a little bit of money out from here as well as people try to rotate back and forth. There's just a lot of indications that we're going to go have a much higher prices. You know, I think we still get up to, you know, the mid 4s or even maybe 5 in corn before it's all said and done. But again, you got to wait your opportunities. But I think the only one I'm concerned about is soybeans, and we just got to watch that $10 level. If that $10 holds, I think we go higher. But of course, we've been chirping around 10 back and forth. So let's see what happens there.
Right now on the soybeans, we have August down 6 at 991.5, and November at 1004 would be down 6 right now. So what a turnaround there. It's now 31 cents off its earlier high last night. Yikes. On the corn market, let's take a look over there. September corn currently down 5.5 at 371 3/4. December down 5.5 at 385 1/4. On the wheat trade, let's go to Chicago. September wheat, we're now down 7 3/4 at 481. Kansas City, we have September down 7 1/4. 480 1/4 is the last trade. And on the Minneapolis market, that thing has just been wild. September now at 726. That's off of its close yesterday by 24.5 cents. And in the cotton market today, the December contract, the only one higher in the crop markets, were 48 points higher at 68.77. Todd, I want to bring you back, and we'll talk about that equally wild livestock trade when we come back in just a moment. Don't go anywhere. Yes, even the oats market has turned around and gone lower by 2 3/4 cents today. We're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago, and he joins us from the trading floor at the CME Group. Time to talk about our livestock trade, and just to set the stage here, of course, we had a very bearish cattle on feed report on Friday. We had the placements about 10% higher than the trade was even looking for, and they were looking for a 6% increase from the year before. So off they went, and they sold them limit down yesterday. So let's take a look at where we now stand on our current futures trade here in the cattle complex today, Todd. Right now, you have your August 67 higher at 114.55 on the live cattle, but October has been on both sides unchanged, and now it's down just 3 ticks, 7 cents lower at 114.33. On the feeder cattle side, right now, you have your August down 45 at 148, but all the others are a little higher. Interesting. September 14 higher at 148.82. October up 28 right now. Now, we had the cold storage numbers that came out yesterday from USDA. Do you think that they have any weight on the market today at all?
No, I don't think so, Marlon. I think we were looking for like 113 basis August cattle, and I think that was the right number. And I think we're going to see, I think there's one more push down there in the fat cattle. And I think, we go out to October, I think we can get down to the low 113s. I think you want to be a buyer. I think this is pretty near the bottom. I would not, as a speculator, I wouldn't sell here anymore. I'm looking for a spot for one more seller to step in and buy. I think they look pretty good here. And the feeders, I think, still have quite a bit of room to go on the downside, although the back months are up a little bit. I think you're going to see one more pretty good push down, but then we'll be looking to buy there as well. I think the whole model sets up pretty well, and as watching it, we've been targeting, 112.5, 113 basis August all the way along, and we've made a couple of attempts to get down there, so I'm not so surprised that we got a little bit of a bounce today. Let's see how it closes, but at the end of the day, I'm looking for a spot to buy. I think they come a little bit lower, but then I think you jump in and you buy them there because I think they're going to go much higher after that.
Very interesting. All right, now as I mentioned, we had the cold storage report that came out after the close yesterday. For what it's worth, I know some folks may be interested in what the numbers were, and here's a closer look on the frozen red meat supplies compared to what they were the month before. We were down 3%, and they're down 7% from a year ago. However, if you look at the beef supplies, they were up 1% from last month, down 10% from a year ago, and the pork was down 5% from last month and down 4% from a year ago. So just to throw those numbers out there. Now, I do want to take a look here at our lean hog trade today, too. And in the lean hog futures right now, we'll see if they're following the cattle or not. It looks like they might be. They're just kind of treading lightly here. It looks like spread trading, Todd. We have August 80 higher at 81.18, and now you have October 35 higher, but the deferreds are a little bit weaker here. If you go out into the, let's call it the early spring months, they're down 10 to 17 cents. What's going on here? Because that spread's already very wide.
Yeah, no, and I think it's going to come in a little bit here. I think that August is going to start to, I think they're going to get it back below 80, and then they're going to really accelerate to the downside. If you're in here, the only way to stay in here if you own them is to hedge them up here, because I think they're going to go much lower now. I think that this is, we've kind of peaked out here. We've had that big between, February, April, and then in July, we already had these things breaking down, and we had the spreads widening, and I think now we're going to start to see them come back in, and I'd look to see August to be a seller here, and I think that we should probably break below 80 and go. I'm looking, my target in just basis on August is 73. So I think we have some substantial room to go to the downside here before we might turn around. And you can see that by looking into the deferreds, how weak they are now in December already.
All right, very good point. All right, well, I appreciate you pointing that out. Todd Bubba Horwitz has a website. You need to check it out. It's pretty awesome. BubbaTrading.com is his website, and I enjoy talking with him all the time from Chicago. Good information.
He's also very active on Twitter.
Yeah.
So that's another good place to find his info.
Yes, ma'am.
Okay, thank you so much, Market.